Yesterday you had a video and a problem dealing with unemployment tax. This is the last payroll tax we're going to be looking at. And this one is a little different and sometimes can be a little more complicated. A couple things. First of all, this is the one unemployment tax that employees do not pay. This is only on the business. The business has to pay this unemployment tax, and there's two parts typically. There's a federal unemployment tax and a state unemployment tax. And what you see on your screen is a spreadsheet showing how this is calculated. This is not from a book of a business. We're not quite ready to put this information into the books of the business yet. First of all, we have to calculate how much the business is going to have to pay for the state and for the federal unemployment tax. So, as the video yesterday said, these taxes are based on a percentage. Typically, the state unemployment tax is a higher percentage that the business has to pay. And it used, as you see at the top, if you look at this line, the video yesterday used 0.8% for the federal unemployment tax, and we'll use the same percentages here. They can vary, particularly the state unemployment tax percentage can vary, but to make it simple, we'll use the same percentages. But you need to remember that this is not, for the federal unemployment tax, this is not 8%, this is 0.8%, which converted to a decimal is 0.008, and that will be important. The state unemployment tax, for our purposes, will use a 5.7% amount, and that converted to a decimal is 0.057. And again, it's important mathematically to understand that conversion. And we'll look at some examples here. And I'm going to show you what the video yesterday talked about and then expanded just a bit longer into the second quarter of the year for this business. So this is a small business with 5 employees, and we'll go through each one. First of all, employee A earns, for the first quarter of the year, for 3 months, this employee earns $2,500. This is the gross pay, not the net pay, but the gross pay, the gross earnings of this employee. And again, at the top, this says for the federal, excuse me, for the federal unemployment tax, this percentage, this 0.008 decimal, is going to be used based on the first $7,000 earned for the year. And that will be important, and it's an important concept to keep in mind. So we first of all look at how much he made. He made $2,500, well below $7,000. So to figure the unemployment tax for the federal amount, you see here there's a formula that gives us $20. If you look at the top up here in the formula line of the Excel worked spreadsheet, there's a formula that will figure this out. And the formula is figured by putting the equal sign, the amount of money, $2,500, the time sign, and then 0.008. If you plug in that formula, it will show $20. So you can figure that way on the Excel spreadsheet, or you can do it on your calculator. And the state unemployment tax is the same kind of formula. If you look up here again, equal sign 2,500 times 0.057. The percentage is different. So that gives us 142.50. So for the first quarter, we have to pay the percentages based on the entire earnings because this employee is not at 7,000 yet. The second one, though, employee B, earned 8,000. And again, at the top, you see that this tax is based on the first 7,000. So in our calculations here, and again, if you look at the formula line, this is based on 7,000 times the decimal, 0.008. The state is based on 7,000 times 0.057. Again, the business does not have to pay once the employee reaches 7,000. So from now on, that employee we don't have to worry about as far as paying unemployment tax for that particular employee because he or she is already over the $7,000 limit. Employee C is at $4,000, so we take the $4,000 times our percentages. We get the federal, and we will get the state unemployment tax by using the proper decimals for the calculation. Employee D made $7,200. Again, we only figured this on the first 7,000. So once again, 7,000 times 0.008, 7,000 times 0.057. Employee E was not hired yet, so obviously that doesn't factor in. The totals down here we will be using later on when we get back to our journal and our ledger. So we're not going to worry about the totals at this point, but they will be important later on. Let's now look at the second quarter. Second quarter of the year, April through June. Let's look at employee A again. During the second quarter, from April through June, this employee again made $2,500. Now, when we figure the unemployment tax, we look at the total amount earned for the entire year, not just the quarter. So we do now have to look at the first quarter plus the second quarter, which obviously equals 5,000. So we're still not at the $7,000 limit. So we will figure the quarterly federal unemployment tax based on the quarterly earnings because that amount does not exceed 7,000 total for the year. So once again, as with all videos, you may need to pause and take notes and maybe rewind a little bit and listen to this again because it can be a little tricky. So once again, we base the federal on 0.008, as you see up in the formula line at the top, times the amount earned this quarter, as long as the total earnings for the year has not exceeded 7,000, and it hasn't. We're at 5,000. So we use the same calculation for federal and for the state again. Let's go to employee B. He or she earned 8,000 first quarter. That put that employee over 7,000 already. So the fact that he or she earned another 8,000 is really not relevant. We don't have to worry about paying any more unemployment tax for that employee. That's already taken care of. He or she has already been over the 7,000 first quarter, so we don't have to pay anything. Now, this gets complicated. If we look at employee C, first quarter, he or she earned 4,000. Second quarter, he or she earned 4,500, totaling $8,500. So that puts that employee over the 7,000. So now how do we calculate this? Let's take a look at, first of all, the federal and look at the formula up above, and it will show 3,000 times 0.008. For the state, it will show 3,000 times 0.057. Now we know where the percentages came from, we've been using those, but where does the 3,000 come from? Well, we have to look at how much of this 4,500 took us to the $7,000 limit. We already paid in the first quarter 4,000 for this employee. So this quarter, we only need to pay up to 7,000 total. So we paid 4,000 already. We need to pay based on $3,000 this quarter because the 4,000 we've already paid in the first quarter. If we pay based on 3,000, as our formula shows, that gets us to 7,000. So the extra 1,500 that was earned from 3,000 to 4,500 in this quarter, we don't have to pay for this particular employee. So that is a little complicated. So it takes a little while to get used to that. We have to understand it's based on the total earnings of the employee. 44,000 plus 4,500 gets us over the 7,000, but we don't have to pay over 7,000. We paid 4,000 already in the first quarter, and we just pay on the 3,000 for the second quarter. and that's what the formula shows us, and those are the results of it. Once again, the employee D was already over 7,000 the first quarter, and we paid based on 7,000 for the federal and the state, and no matter how much he or she earns this quarter, we've already paid the total amount in the first quarter, so we don't need to pay any more. Employee E was hired April 15th, so he or she earned 5,300 during the quarter, and that means that he or she is not over the 7,000. So when we calculate, we have to use the entire amount earned, the 5,300 times our 2 percentages. And you see the totals there again that we'll use a little later. A couple things to remember. One is employees do not pay, so we don't have to do a payroll deduction for our employees, but the business does have to pay the unemployment taxes. And this line up here and this line here at the very top are important. These are the percentages based on the first $7,000 earned for the year per employee. So the key in this particular problem probably would be employee C with the 4,000 earned in the first quarter, 4,500 the second quarter. So if you need to, again, rewind, go back, watch this video again, because you need to get this straight, because we'll have several problems dealing with this. At this time, you're going to see a problem, so go back to your course page and let's do that problem now.